Hello and welcome to my second YouTube video. In this video I will backtest the previous week, which is from 9th to 13th of September. Okay, I'm backtesting only on my strategy I released on the first video and in Twitter, which is the WS time-based entry model. Okay, so let's start with the beginning on Monday here. Let's go. So here it's really important and something that you don't know yet. I think it will be my gift for Christmas for y'all, and it will be the drawing liquidity. Okay, so in this case you don't know this part, so you just have to believe me that we were bearish here on the first part of the week, and on the second part we were bullish. So I'm gonna draw the drawing liquidities. Here was first one, and this was the drawing liquidity for the beginning of the week here, and this one. Okay, so another thing that you don't know yet, it's to divide the drawing liquidity. In this case was bearish and the high, like if it's a range, so we divide this into quarters. Okay, that will be this one, and you will see the magic here, what's happening. So here you will see that every single quarter price acts like a different way. You see that here price is really sensitive. Remember that this is the first Friday of the week, the month, which is NFP day. So here are the news. If you have seen my Twitter that day, I went short here. Here was my short, and my exit was this is 8 a.m. so it should be here at 9 a.m. here. This is also time-based, not the entry, this is another model, and this is time-based exit. Okay, I'm not talking yet on the entries and exits. This is regarding chapter 4 of my series Decoding the Algorithm that I'm doing on Twitter. If you didn't see the series, you have here my Twitter. You can go to highlights, and here you have all the episodes, starting with first one here, second one time-based entries, third one it's fader swings, and the fourth one will be the logic behind my entries and my exits that I will release once we reach 250 retweets, as I said, so it's only 52 left. And here, if you are Spanish, aquí pone destacados. Esta no te lo esperabas, ¿eh? Destacados, aquí verás mi perfil, exactamente lo mismo. So let's continue with the video. Okay, we were here. If we divide the high and the drawing liquidity into quarters, you will see that price acts different on every quarter, and when shift with the other one, you see here really sensitive. Here high resistance liquidity run, here low resistance liquidity run on this quarter. Once we break and we close below, here you see this is the end of the week, the previous week, and here's the beginning of the new week. So here you see every single candle it's not making higher highs, and every single time it's making lower lows. So here lower until we close here the 4 a.m. at the last quarter. Here should be reversed. So the last 25% until drawing liquidity, because this one was really sensitive. Here was the high resistance, here low resistance, so here will be again high resistance, but of course we will reach my drawing liquidity. That will be this one. Here you see that fails to complete on Asia on Monday, So here it's just a retracement, it will never reverse because my drawn liquidity wasn't reached yet. And here completes. So time-based exit. I will go step by step, but let me first explain this. Here will be the exit and price because has reached my weekly objective, can reverse, and the new weekly objective will be the following. Well, first of all, I'm not sure. Let me see. Okay. And this was my news draws on liquidity. First one is this one, and secondly we have this one for the rest of the week. Here you see first one, but because the second one wasn't reached, price continue higher. So in this case we can do exactly the same. We can divide into quarters from the low to the drawn liquidity. So here in the first quarter we have high resistance, second one we have low resistance. Well, actually only on the first quarter we have high resistance, but if you see here in lower time frame, you would see that it's not that low resistance. Like if you go to 5 minutes, you see here it's going higher, and here on the third quarter and fourth quarter there's a model that I didn't release either, which is my SLF model, which happens exactly the same here. SLF model is when the algorithm, well, price, yeah, the algorithm is sending price to the drawn liquidity without any retracement, only doing lower lows, lower lows, lower lows here, and you see here higher highs, higher highs. So here it's 0% drawdown guaranteed, 100%. And here we have another time-based entry and time-based exit, okay? Because my here and here was my bearish drawn liquidity and here was my bullish drawn liquidity for the week. Once both are reached, price doesn't need to go anywhere else. So it just playing inside this little range here that will create. And here it was one of the best days of the week, I would say even of the month. That was really easy to trade. Here you will see that every single time it's making higher highs, lower lows, higher highs, lower lows. Well, you can see that better here, but if you go here and you see here entry, exit, entry, exit, entry, exit, entry, exit. You see here, and for next week we have the exit. Well, it's almost complete. It will just create a lower low. I'm not holding trades. I mean, I'm not holding trades overnight, and of course I'm not holding trades over the weekend because of the new week opening up. I'm not exposed to it. So here, with the diversions we had here, this will be like here, high, low, high, and finally low. All right, once that's said, let's start with the video. This will be a boring video, okay? As I said, will be just backtesting every single entry and of course with the exit of my model that I released, time-based entry by Wall Street. So let's start with the beginning on Monday here. Yeah, I want to see the drawn liquidity, which is here, first one, and secondly we had this one here, which is important, and I also want to see the quarters from here to here. So I went short on Monday here on the week of this candle. So in this case we don't have the time-based entry model, okay? So I cannot explain this entry, but for you to know, my entry was based on the power of 3 of the 3 a.m. candle. Okay, power of 3, as you know, is just because we were short, going short above the opening price. Okay, exactly happens at 2 a.m. and exactly happens here at 4 a.m. In this case, I went short at 3 a.m. As I said, I'm not explaining this model, which is SLF, going lower, lower, lower every single time. So because my entry was here, something like this, like 5 to 6 pips is my average stop loss. So I'm not explaining my entry, but I will explain my exit. Even that my liquidity was lower, take into account that we were on Monday without high impact news. So as soon as I get an exit on the new 4-hour candle, in this case, I mean the 5 a.m. candle is more so important because opens on 4 a.m. time frame. You see here 5 a.m. prints a new candle. On 6 hours here prints a new candle as well, and here on 12 hour exactly the same. So I like to divide the day, which has of course 24 hours, as I said in the first video. I like to divide it into multiple time frames, and one of the most important to me is 5 a.m. because it's one of the time frames that has more high time frame opens. So here you go. That's the reason that I like to exit at 5 a.m. lower low or high high if we were bullish. So going back here, what do we want to see? It's that the last quarter acts like a real resistance. This will validate my bearish scenario and my bearish drawn liquidities. Here you see lower time frame. By the way, look at here. This acts like a real resistance that here was already validated. Here, starting the week like this is like free money on the first session. I made like 8 hours here on the short on EU and U, but well, that's not the case here in this video. Here you see when 5 a.m. prints a lower low, you see what happened here. This is already 5 a.m. but price failed to do the lower low. The objective is lower, so this is just a retracement. I would say also that this is just another short opportunity, but because this one it's not taking this high, I'm not talking about this short here. Okay, so there you go. This is your exit here when the 5 a.m. is printing a lower low. Well, you don't need to exit here. In my case, I exit here because I know the context and the narrative of the week. And you see how price turns to our high resistance liquidity run. Okay. Remember I said that this quarter was low resistance. So this one, because we were Monday going into New York, the liquidity wasn't reached. Price will just consolidate or even reverse going into next day and finally complete with the triangle liquidity, which is the ones that I have here. So let's go to, I think there's here another short opportunity, but if you have seen my second chapter that I talk about the sessions, I said that I don't trade New York PM session because I am European. I trade the beginning of the day in London here. Sometimes, well, I also trade the London lunch here, and sometimes I trade New York AM session when we have news or the liquidity of the day wasn't reached and it's so obvious. In this case, I also trade New York, but what I don't trade is the PM session. I don't like trading in Forex. If I'm trading futures, like in the indices, of course I would trade this session, but it's not the case. I need to rest also. So here will be the first time-based entry. So, which is the trend liquidity? This one, bearish, right? So let's go now to a higher time frame. That could be 4 hours. We want a push of the previous candle, and we want to exit at the new print candle here. So if you go to 1 hour, you will see that this one, the 12 p.m. candle fails to make the to push this high here. So this is the candle that it's making the push, so we don't need the 2 p.m. candle to make another push. It's already done here. So from here we will start looking for short opportunities, and as you already know, we will focus on the first 15 minutes of the hour. Okay, so here starts, where are you? Here starts the 1 p.m. hour. So the first 15 minutes we want to create the higher high. In this case, you see here at 1 p.m. and 20 minutes creates another higher high here, but you see the difference, it's not even half of a pip, so well, you see it's nothing. There is a margin of 5 minutes, exactly the same that happens with the failure swings at the last 5, or I would say 10 minutes. I would say between 5, 7, 8 minutes of the hour, there's a margin of error. Okay, so exactly the same happens with a new candle. It can create the high at the first 15 minutes, but you can add 5 minutes of margin. In this case, it's not relevant because it's not even half of a pip. So you want to, after the high time frame right, you want to go short here. As I said, I'm not trading this kill zone, let's say, but anyway, if you are trading this one, here is your entry. I'm not talking about stop loss placement or my entries on this video. As I said at the beginning, I will talk about my entries and exits, stop loss placement, and everything you need on the 4th chapter when we reach the objective of the 3rd chapter. Okay, so it's your job now if you want the video. So where is your exit? When a new high time frame candle is printed. In this case, you see here 1 p.m. so next one is 5 p.m. When 5 p.m. candle creates a lower low here, you see at the beginning of the candle, it's my exit here. Okay, but look at this, the objective is not reached yet, so that's perfect because we already know the bias for the next day. Here's some tips that I'm saying. So we want this to fail to complete the trend liquidity. So we will know that what will happen now is just a retracement. It will be never a reversal going to this high, this one. You see, if you are trading ICT concepts, smart money concepts, whatever, you would think, okay, this is buy side liquidity, right? Here to previous day low. Here's the turtle soup. So here in London, we will look for, here you see, here make another turtle soup, right? And here it's our long. This is just a retracement, OTE entry. Yeah, I'm reading your mind. OTE, order block, fair value gap, this one here, really clean, and got stopped out. Yeah, that's not the way to trade. So this is the trend liquidity still open. So let's look for a short opportunity here. Here again we have another time-based entry model in play. So look at the 1 a.m. candle, which is London. I'm not sure if we have SMT here with you. Let me see really quick. Yes. So here we have another confluence, which is SMT or divergence, whatever you want to say, when you is making a higher high and you failed to create a higher high. The reason of this is because you already complete its down liquidity. Was, if I'm not wrong, well, I don't remember, to be honest. I don't want to say something wrong, but just imagine was this one. So in this case, you already complete with its bearish down liquidity for the week, or maybe it was a lower one. Well, I don't know, whatever. Yeah, that's the reason. You already complete its bearish down liquidity. So in this case, this is the strong pair. So you want to sell short the weak pair that was this one. So we want to see things like this, that you is failing to make this higher high. But anyway, this is not the high that I'm taking into account into this model. This is the one that I want to rate. This is the previous one, which is Asia. So once this is purged, we want to go to lower time frame, in this case 1 hour, and you want to see a low purge here at 3 AM candle. What do we see? It's exactly the same level without wick. This is really weird to happen. You see here, it's exactly the same level, but if you go to here, you see the 2 AM high is this one, and at 3 AM makes a higher high, so we have divergence here. Also, if you go to the XY, where are you? Here. You see that the 3 AM candle creates also a lower low, so we have a double confluence. So to me, in my eyes, this looks like this. And if you go to 1 hour, you see that the 3 AM candle purge previous candle, purge the high time frame previous candle. So where is our exit? Remember, we still bearish here, which is this candle. When we print another high time frame candle, when we print another low, this is a safe exit, okay? But going to the entry, as always, this doesn't exist. We are looking for create the high of the candle of the hour at the first 15 minutes. In this case, happened exactly at the first candle. So that's perfect. Anyway, this is difficult. This trade here, it was really difficult to take. The reason is because look at what happened at the first minute. It creates this sell-off here in only 1 minute 7 pips, so this was really difficult to take here above, so no problem. Actually, I didn't take this short. So where is your exit, your other entry? I'm not talking about the entries as I said, but a good entry point could be at the very next candle. It will create a power free, right? So the very next candle is the next 5 AM candle, which is 305. Here we want to go short above the next 5 AM open, which is anything above here. You see the open, you see this number here, it's 426. So from here you're allowed to go short. So imagine we place our sell here. The stop must be protected with the high in this case, because we are not selling short here. We don't have wick, so we are selling short here. This is protected. So we have two options right now. You can exit at the new 5 AM lower low. That happens here. You see 5 AM is making lower low, but what's happening here? For most of you, 1.5 risk reward ratio is not enough. Actually, I'm also looking for at least 2 hours, but most of my trades are looking for 3 hours. So in this case, you can just parcel something here, place break even, so this must be protected, or the third option is, well, third option is close full trade, or fourth option is don't do anything. But as I said, your stop loss should be protected or at least 50%. I don't like place 50%, I like just don't change anything or protect full position here, because in any case this was invalidated. It just because it's creating another high time frame candle. As you know, it's creating, this is the opening, so next candle have to create the power of 3, in this case a high, finally complete with the trend liquidity and the close. So in this case, anything above the open price would be ideal shorts. And you see here, I took this short here. Okay, this is just going back to our exit entry point. So let's see what happened here. This is the second short of the day. Okay, I think I already said, but I'm only focusing on EU, but this happens on every single pair or every single market, every single session. I mean, if you are watching futures on Nasdaq or S&P or Dow Jones, this is exactly the same. If you are watching gold, it's exactly the same. If you are watching whatever, Aussie dollar, USD CAD, EUR-CHF, I don't know, I don't care. Every single asset, crypto. Well, crypto, it works, for instance, on Bitcoin, Solana, Ethereum, but I'm not sure if you go to a really random crypto like Doji or something like this, if this works. Actually, I don't care. I don't trade this. So going back here, so we want a high time frame purge. Remember, our down liquidity is still clean, so we are still looking for shorts. If we go to 4 hours, you see that we don't need to go back here again, because if we need to make every single time a higher high, price will be something like this here. And as you know, price doesn't move like this. Sometimes needs to fail to make the higher high. The reason, because in lower time frame, you see in this here, you see 3 hours, we see exactly the same here, so no problem. We can go to 2 hours, and what do we see here? Another high time frame, right? Okay. In this case, it's 7 a.m. I'm not sure if we got some news here. No, we don't. We didn't. So here you see 6 a.m. candle fails to make the higher high, and 7 a.m. candle makes the higher high. So in this case, you want to find your entry on the first 15 minutes of the 7 a.m. candle. Here to here. All right. So after the high time frame right, you want to look for a low time frame right here. So that could be your entry point and your exit point. You have 2 options now. First one is this one. Secondly, something like this. Secondly, it's the new 9 a.m. lower low. So what do we see here? This is not rich, not even the first trend liquidity for the week is rich, but look at how close and look at the time. This is the end of 8 a.m. candle. So we already know this is just noise. This is just like time distortion to go to the new 9 a.m. candle and finally complete with our targets. Okay, so you are exiting here. I mean, you can exit here. Actually, I took this short, not here. I took the short here on this power of 3. That's exactly what I said on Monday, that this model, or what I said here when we miss the first and the most optimal entry. So we want to go short on the next power of 3. So above the next open of this candle, we want to go short. This is where I went short. My stop loss was protected at the high. So why I didn't exit here or here? Because we were the last 10 minutes of the 9 a.m. candle. I am also talking about this on the next chapter. So we want to exit at the new 10 a.m. lower low. Here is your optimal exit. And also what happened? There are no more bearish objectives for the week. So what does it mean? That price can reverse now and start looking for bullish prices. So what do we see here? Of course, as I said, I'm not talking about these entries. I'm not trading this time, but because I know most of you or some of you are trading this time, I will talk about this long, okay? So I can delete everything that happened before. Just for you to know, I will let this here, which is the bearish and equity for the week. See, this is done. So, where is your entry here? If you are going long, do we have a high time frame, right? Yes, happened here. Secondly, do we have a low time frame, right? Yes, it happened here. So from here, you will start looking for longs. So this should happen exactly the same at the beginning of 10 a.m. candle. But look at what happened here. At the new 11 a.m. candle tries to make a lower low. And when this happened, look at the time. This is the end of the 10 a.m. candle. Actually, at the last, as I said before, there's a margin of to one candle of 5-minute time frame. So on 5 minutes, that we can have this margin. This should be not 10 minutes, but 7 minutes, 6 minutes, something like this. We can check it if this happens. I don't know. Yeah, there's a margin of here 1, 2, so it's 7 minutes. So this could be like another failure swing in lower time frame, and after this you have another failure swing of the next candle. But you don't need to understand what I just said. Just go to 5 minutes here and you see that the low of the 10 a.m. candle was created at the last 7 minutes. So this candle tries to make a lower low and fails. You have to watch chapter 3, which I talk about failure swings, to understand what I just said and why this happened. For the algorithm, this is already the new 11 a.m. candle. So this looks like this in my eyes. And look at what happened if you go to 1 hour. You see that we have here, sorry. Here was the high time frame, right? So from here we will look for a hourly, right? And then we will look for a low time frame, right, on 5 minutes. Because this wasn't complete, of course this is not a long opportunity. I mean, we will start looking for longs at least after taking this low. So at least from here, it's our first long opportunity, not before. We are not allowed to look for longs before taking the bearish objective, and secondly after making a low time frame right. So here would be your longs, not before. Okay, so as I said, this is just a failure swing. Okay, this doesn't happen, this candle is weak, but it does in my eyes. So this could be another long opportunity, but of course you are not going long here because this never happened. So you can go long where? When the new 11 hourly candle creates what? A power of 3. So here's the opening price, so anything below is your long opportunity. Here, stop loss placement, as I said, I'm not talking about this. So you can exit where? You already know the time-based exit, right? When does the new high time frame candle print? Here. Of course, you don't need to exit here because it's not even like 10 pips maybe. Yeah, I mean, I never exit at this risk reward. So in this case, the logic, this is Asia, so the logic is exit when the new London candle is print. So the new 1 AM candle in 4 hours in this case, it's print. So where are you exiting? Here. You see? Here. That's your exit. And look what happens for the rest of the session. Absolutely nothing. This was the CPI day. I'm making an exception now because I will talk about GU. The only reason it's because this price action was bullshit. That's almost impossible to make money. Actually, I made just a parcel here. I went short here on this candle and I exit here on the new 4 hour lower low. Okay, but this is really difficult to trade. We were in the previous session of CPI. I don't recommend you to trade this session, but why we can trade GU in this day on this session? Because we had GDP of GBP. Where are you? The XY. Tuesday. Oh, sorry. Oh, we're on Wednesday, right? Yes. Here. All right, so let's go. Exactly the same. And yeah, this model happens with news, without news, every single market, every single day, every single session. This is how the algorithm is coded, so of course it's happening every single time. Do we have the high time frame right of previous candle? Yes, we do. So you can see it better here. What else? So here at 1 AM happens the right of previous candle. So you want to trade before the 2 AM candle because this is the candle of the news of GDP. This is like the 3 AM candle on a normal day that we don't have GDP news. I mean, this is important what I just said. We have 4 days of the month that we have GDP news at 2 AM, which are high impact. Okay, and GDP is one of them. The other one is CPI, retail sales, and I don't remember the other one. View. Let me check really quick. This is this week. I don't care about you. Don't care about you either. Okay. Yeah, climate count change. This is the other one that happens on Tuesday. So if you go to Tuesday, you see, right? You see why you can trade here. I don't know if I should explain this entry. No, I won't. This is another model. Only for you to know, real quick. I only want you to focus on the failure swing episode and what happened here. Look at the 1 AM low. Here. Look at this time. This is 155. Actually, this broker is different that Forex count. For instance, if you go here, you see that the 2 AM doesn't make a lower low. So I will talk about this range. Sorry, this range is this broker. So the 1 AM low is this one. So here is the last candle of 1 AM. Here are the news at 2 AM. So look at the time, it's the last candle. So to me, this is already the next 2 AM candle, and in 1 hour it doesn't look like this. In 1 hour, to me, this looks like this, because 155 it's already to me the new 2 AM candle. This is the 1 hour, right? Like this. I mean, this candle to me it's here already. And finally, you have your exit where when we create a higher high. So here, this is the 2 AM high, so you can exit in this week here, and you see what happened next. Yeah, anyways, I'm not talking about GPU, so it's not the case for the video. So let's go back here, where I was talking about on Thursday on GDP. Sorry, not Thursday, Wednesday. So I was on FXM. High time frame, right, done. This candle, it's not making the previous candle purge. The reason is really simple, because here was 155 and 2 AM, so in this case, watching this, we already know that this won't happen because we are not even close to this high. So if you were waiting for a purge to then go lower, you just missed this short opportunity. It's okay. There's every single day on every single pair trade opportunity. I would say there are like 3 to 4 trade opportunity per day, in my opinion. That's why, I mean, there are different models, of course. If you are waiting for this model to happen here, you didn't take the short, okay? But you can, well, whatever. It's not the case of this video. So in case you were short, you went short here, as I said, I'm not talking about this entry model, but I will talk about the exit model. As always, which time do we exit? when the new high time frame candle is print, and it's printing lower lows because we were bearish. So when this happened, you see here, this is 4 a.m. So 4 a.m. and didn't make a lower low, and we are bearish. Because we are bearish, this is different if we are bullish. Because we were bearish, price have to create another lower low, so that could be our exit point. Here you see your exit here. Look at the time. Here was 5 a.m. but 5 a.m. we're going here, we're going up. This could be another entry. Forgot about this one. You see what happened here. The 4 a.m. sorry, the 4 a.m. the 4 time frame, 4 hour time frame right was already done. So here you have another lower time frame right, which is in 2 hours in this case. So here we start looking for shorts. We want to create the high of the 5 a.m. candle in this case on the first 15 minutes. You see here opens a 5 a.m. candle, and here was the high on the exactly 15 minutes. So we are going to start looking for shorts after taking, of course, the high time frame previous candle, which is this one. So here is the right in lower time frame. So a good entry point to go short could be this one, and your exit is exactly the same than this short here, which is the new 5 a.m. lower low. In this case doesn't happen, as I said, at 5 a.m. It happens at the next candle at 6 and 25 minutes. So here is your exit. Look what happened if you don't exit here. You got stepped out at break even, or maybe, well, it never touched, but because of the spread, or if you went short here, step out at break even and then makes the move. In this case, this was perfect. If you held this position till here, that's just amazing. Not my case. So this was about London session and you. I wanted to talk about this session only because of the GBP news. So let's go back to EU to talk about New York. So let's find our entry. Remember, this is the CPI session, okay? The CPI day on this candle. If you watch second chapter, I talk about when we trade the 5 a.m. candle, and one of the reasons it's when we have a 8:30 news, which was the CPI case, and also we have bearish targets. Remember, the bearish targets of the week were already complete, so this is just to create a lower low and then go up, but not important here. So do we have the right or the porch of previous candle? Yes. Where is our exit? When the high time frame new candle is print. So here at 9 a.m. lower low, we exit here. We entry. If we can enter here, that's perfect. We want to entry above the candle open, right? So let's go now to 1 hour time frame. We are not allowed to look for shorts before taking the previous high time frame candle. So from here we will start looking for shorts. So that's really similar case that happened here. You see that the news was here, so we don't expect to make another higher high then go lower. So here where the news, we don't expect to make another higher high before go lower. So let's add some confluence. Well, first of all, where is the high, or when should the high should be print? At the first 15 minutes. And what happened here? The high was print at the half of the hourly candle, right? So in this case, we need to see what's happened on the correlated assets. Are these are the theory happening? I mean, the first 15 minutes are making the higher high. So let's see what happened here. And you, this is the correlated asset of you, also the XY. So here are the first 15 minutes, and what happened? The high was created at 7 a.m. Okay, so this is what? This is the divergence that we have with you, and also we have this one. So in my eyes, even can look weird to you. To me, this candle, it looks like this. And if you go now to 4 hours, what do we see here? Sorry. That this candle purged previous candle high. Okay. So let's go back here. So we know that this is divergence, and we also have this one, you making higher highs, you making lower highs. Okay, so our entry, our perfect entry was here. Where are you? Here. But this is the beginning of 7 a.m. candle. When there's news, I like to trade as close as possible to news. I cannot explain the reason, but anyway. So I went short here on this candle. This was protected with a high. And where did I exit? You already know, right? When the 9 a.m. creates a lower low. In this case, it doesn't happen at 9 a.m. But when I say 9 a.m., it's the 9 a.m. high time frame candle. So anything after the 9 a.m. So this is the 4-hour candle here, and this case happens here. So as I said, the bearish objective of the week was already complete. There is no more bearish objective, and now price turns bullish. So from here to where did I set? Here, right? Here is my next drawn liquidity for the week. As I said, I'm revealing, I'm talking about the drawn liquidity for Christmas as my gift for you, but we are still in September. So you should study this model, how it works every single day on every single pair. The bias is important, yes, it's important, but only knowing something about the bias that you may find on YouTube for free. If you write like how to find buyers or something like this, I don't know. I think most of the videos are bullshit, but maybe some of them are at least just a bit good enough. Alright. So Wednesday, I'm not sure. Yeah, there's no other entry here for me. We are going to Asia, so nothing to see here. So why the quadrants, the quarters here? Sorry. So what do we see here? This is high resistance, right? Going higher, lower, higher, lower. Finally, when we break this one, price shift to another, like let's say price delivery. You see here, even that's high resistance, price is going higher and higher, but let's see the magic when price goes to this quarter and following quarter. Price changed to my SLF model, which is 0% drawdown in the price, so price is going straight to our drawn liquidity. Let's see. Here, see, higher, 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 higher. And let's see the last quarter, how price goes higher, higher, and higher. Alright, so this is the new 21 candle. Well, first of all, before going to Friday, let's talk about Thursday, right? So let me delete this for now. Okay, remember, there are no more bearish objectives, so we will start looking for longs. But before looking for longs, you have to understand the context and the narrative of the day. We had interest rates of EU here, 8 and 15. We had 15 minutes later here the unemployment and PPI. So here is when I like to trade on the days that we have interest rates. So I don't like trading the previous session of the pair that we have interest rates. But anyway, you will see that it was a difficult session here. Was actually doing anything, but we could have a good trade. So let's go. Did we write previous candle? Yes. Let's add more confluence. Look at these highs. So you created a higher high while you failed to create a higher high. So this is your first confluence. The versions here. Second one, high time frame push of this candle. Next one, you see 2 AM, push previous candle. And let's find now on the first 15 minutes. So we are not allowed to start looking for shorts before taking this high here. So in the first 15 minutes, let's find our short opportunity, or in other words, let's look to the high of the candle to be created on the first 15 minutes. You see here it's perfect again. To 15 minutes we create the high. So this is your short opportunity here. If you were expecting to make a lower time frame right here, that never happened. This is because here already happened the high time frame push. Here, this is the end of 1 AM candle. So as soon as we create another higher high, we don't need to make another lower time frame higher high. So this is your short opportunity. In the case you didn't take this short, the next candle power 3, as you already know, is your short opportunity. So here you are going short. I don't place 3 pips stop loss, minimum 5 pips. So what is the liquidity here? So do we wait for the new 5 AM candle to print a lower low? No. Why? Because we are going counter trend. If we are going counter trend, we have 2 options. We expect to exit our positions when we create a high time frame lower low, but look at how far we are from the 5 AM candle. We still have 3 hours left here. Okay, 2.5 hours left. So in this case, we don't wait to this candle to print lower low because we are going counter trend. So this just well, I cannot say this here. Where do we exit here? On the new hourly lower low. So exactly the same that happens on high time frame can happen on hourly candles. So where is your exit? 3 a.m. lower low. Here you see 3 a.m. Here is your exit. This is low hanging fruit objective. Okay. As soon as we create a lower low, we exit, and this is longs opportunities to go higher. And let's see what happened. And finally, with the news here, boom. Okay, so let's go here. So similar that happened before. This candle low was already purged. And let's look now for longs. Purge here, so we can make another hourly purge, and let's look for longs here. Another random thing on the markets to create the low in the first 15 minutes of the hourly candle here at 4 a.m. exactly. So here could be your long opportunity. If you are waiting to create a lower low and never happen, it's okay. You can just go long on the next power of 3. Here never happened. So you don't want to go long on this power 3 because we are far from the purge. So we want to create a lower time frame purge again. In this case, look at here what happened. And we are really close to the high time frame purge. So this is a good long opportunity. Or you can just go long on the power 3 of this candle. I mean, anything like this is a good long opportunity. It doesn't mean that, it doesn't care that you have some drawdown here on your entry because your daily equity is bullish. Is this one here. That's a lot. I don't hold trades for 80 pips. This is not realistic to me. Maybe for you, but not for me. Not for my way to trade, but whatever. Okay, so that could be your entry point. So where are you exiting the position? You already know, right? When is the 5 a.m. creating a higher high? This is the 4-hour high. So here with the news. So 5 pips, as I said, it's 5 to 7 pips. It's where I place always. So here are your exit. Imagine that now you are trading New York, the news. Of course, you can trade the news. If someone is telling you otherwise, doesn't have an idea about trading. The markets are moving with news. The news are the catalyst to move price. Whatever. So, as I said, the high time frame purge already happened here, right? Sorry, not this one. This one. So price have to come back here to make another one. If this already happened, no. Remember, this high being bullish, it didn't print either a higher high. So this is still our daily equity, even that we are here, but we are not exiting here if we are going long here. So because this higher time frame was already done, we can look for a lower time frame, right? If you go to 3 hours, you see here we write the previous candle, And we still want to create the higher high of this candle. But are we exiting here? No. We can exit when we create the new 4-hour higher high, or in this case, because we were on 3 hours when we make the right, we can exit when we create a 3 hours higher high. So let's go here. Let's see if you can understand. This is higher high in 4 hour, 6 hours, and 12-hour time frame. And here sorry, I don't know what is this one. Which was this high? In 1 hour. Ah, okay, I do remember. 9 a.m. higher high in 4-hour time frame. And here, which is the time that this happened. Higher high on 3 hours. 3 hours and 6 hours. And 2 hours. Awesome. Okay. So remember, this was the 4-hour high time frame right. This already happened, so price doesn't need to come back here to make another lower low because this is already done. So in this case, we can focus on lower time frames. In this case, it was a 3-hour time frame right. When do we want to create the low of 8 a.m. candle? Remember, is the one that we have news, so we can trade here in the first 15 minutes, and surprise, again, the low was created on the first 15 minutes. Also, what else? You want in 1 hour to make a lower time frame right. In this case, this fails to make this lower low. So in this case, the 8 a.m. candle is the one that is making the lower low. So of course, I will be looking for longs here. We are not looking for longs in this small space, but this one. So you can see it better. So let's look for a low time frame right. This was with the news. So it's difficult to go long here because this happened really quick. So you can just go long here. Something like this before the news. This was interest rates here, and this was PPI and unemployment. First exit, remember, of the 1 a.m. in 4-hour higher high, this one, but look at the ratio. It's only 2 hours, depends of your stop placement. But where is my low-hanging fruit objective exit? Remember, this is a trend liquidity, so we are bullish. So now price should at least print another higher high on higher time frame candles. So at least we are exiting at the 9 a.m. higher high in 4-hour time frame. So this looks better, right? This risk reward ratio looks better. But remember, we went long here on 3-hour time frame. So where is our next 3-hour candle that is printing a higher high? Here. After the 11 was open, here this is the power of 3 of this candle, and finally it will create at least another higher high. If price wants to reverse, at least we have to create this higher high and then continue higher. So remember, what do we expect here? Its price change to my SLF model, which is zero drawdown guaranteed. You see higher highs. It doesn't matter where are you going long, because every single time it will keep going higher and higher and higher until we reach, see here, until we reach the last quarter. So we are going to Friday now, and happened something that's, I mean, it's like perfect. It's free money to me. Wait, yes, this one. To me, this is free money. What's happening here? We are in the last quarter of my drawn liquidity, and price creates a right of the 4-hour candle here, you see, and fails to complete with my drawn liquidity, which is this one. Of course, I'm not trading this time, I'm sleeping. I entry charts at 2:30 most of the days if we don't have the GBP news, as I said before, the 4-1. So of course I'm not taking this short here. It's a good short opportunity, yeah, but we are going counter trend, and look how close we are to our objective. So exactly the same happened here. We want to write previous candle. Which one? This one. So from here we will look for a hourly right. Which candle? 3 AM. That's the candle that we are focusing if we don't have news at 2 AM. So for you to understand, this is 2 AM low, and this is 4-hour or high time frame right. After the right, you see that happens. Well, first of all, when should the low be created? Let's see another random thing in the markets. Well, surprise, right? So from here, some of you went long here. Why? I mean, was the 2 AM purge? No, right? So at least we will look for longs from the 3 AM here. Sorry, 3 AM is this one, but look what happened. So opens here, tries to make lower low and goes up here, but was a 2 AM low purge? No, so we expect what? To purge this low, then free row to go higher. Do we have a low time frame right? Yes. If you go to my profile on Twitter, again, you will see that I went long here, not on you, I went long on you. At the same point that I'm just saying now, which is this one. My long entry was here, look at the time, random, right? Where was my exit? Let's see other random things on the market. Where is the high? Created here. Look at the time, 5 AM, higher high. Look what happens next. Boom, random. Well, this was your perfect entry. I didn't take this one because I was on one account taking this long. Then I switched to another account and I went long on the power of 3 of, I don't know if it was this or this candle, one of these two candles. I went long. I think it was this one, definitely. and surprise. Are we exiting here? Look at the time. No. I mean, we can exit here, of course. I mean, this was my long. It was like 3 hours. Actually was 4.5 hours here. Yeah, it was really similar than this one, the long I took on you. And here I took only, I think it was 2.5, something like this, or 2 hours maybe. Of course, this is a good long opportunity because this was our bullish weekly drawn liquidity. But where is our exit, our optimal exit? Here. Look at that here. This is when the 5 a.m. prints a higher high. Here in this week. So you are exiting here. Look what happens next. Reversal. Here looks better, right? Actually, we have another confluence that U is printing higher highs while U is printing lower lows. So that's a confluence to start looking for shorts. So now we have both the bullish and the bearish target of the week complete. So as I said, what do expect is something like this. Okay. So let's go here. High time frame purge done. Let's go to 1 hour, and you see that here fails. So this is the 5 a.m. candle that creates a higher high here, and this could be your entry point. Yeah, that's definitely not this model. This is a different model. When if you go to chapter 2, if the London, let me see here. Highlights. Where is chapter 2 here? When do we trade the London lunch? If the London candle has reached its run liquidity, in this case of the week and the day, because it was exactly the same, there's a reversal in play. So this is the first scenario, was the reason of this reversal. Do we have a setup? Do we have a bearish setup in play, a bearish scenario? Let's see it. Do we have a high time frame right? Let me see it, of the previous candle. Yes. This happens on London lunch after 5 a.m. Yes, you see, look at the time. This doesn't happen on the first 15 minutes. Why? Because this high wasn't taken. Well, actually it was this one. No, this is the previous candle. So the candle before. So the previous candle was this one. The high was taken not on the first 15 minutes. So here what do we expect is to create the high. And what is this? Well, this is actually my SLF model again, with 0 drawdown guaranteed in this happening. But if you see Gluty profile that we are trading on Twitter, that we are trading same strategy, he took the short here on this power of 3, and he took another short. Well, I'm not sure, but it was something like this, and here was its run liquidity, and you'll see now. So where are we exiting? Are we exiting at 9 a.m? No, why not? Because we are not bullish or bearish. We don't have a higher time frame daily liquidity. So if we don't have a higher time frame daily liquidity, or we are going counter trend, when are we taking out our trades? When we print a new candle, in this case because we were short, when we print another lower low. Look at this, this is 6 a.m. low. So we can enter here, but let's say that we enter here, this power free. Here we can enter again. Where are we exiting? When the 7 a.m. prints a lower low. And here is your exit. What happens on you? That fails to make this lower low. So this is the divergence again, SMT, whatever you want to say. So to me, this was already complete. So if you were short here, this is your exit point, because look what happened on you. So you exit your trade here. Remember, we don't have high time frame bullish or bearish targets. Did we push previous candle? Yes. Let's go now to the 8 a.m. here. Remember, we are exiting here our short, so we start looking for longs here. What we want to create is the low of the 8 a.m. candle on the first 15 minutes. Let's see the magic again. Surprise. So if you were waiting a low time frame right here, this never happened. Exactly the same. You go to the next power of 3 here of this candle, never creates a power of 3. You want to go short here, no, because you are far from here. So you want at least to create a low time frame purge. That happened here. So this is your long. 5 to 7 pips, as always, is my stop loss placement. Where are you exiting your position? Remember, this is not the dry liquidity. I mean, it is, but you don't know why yet. So where are you exiting? Look at the time, 8:55, boom. 9 a.m. is creating a higher high, so you are exiting here. Is 3 hours enough? I think so, right? Or 2.5, yeah. So you are exiting here when the new high time frame candle is print. And finally took this high. Actually, there is another short setup here. Let's see. Do we have a high time frame right? Yes. Let's go to 1 hour now. Hourly right. But look at the time this high was created, so in this case we are not taking this short here. But look at this, what is this? This is a failure swing. Why? Because the new 11 a.m. candle tries to make a higher high. Here, so here at the beginning of 11 a.m. candle tries to make a higher high. So to me, this in 1 hour looks like this. So this is already a 1 hour purge. You don't need to know this and see this. So where is your short? I mean, this to me this is not a short opportunity because of time of day of the week, because it is the close of the weekly candle on Friday. I never trade this unless we have news. It's not the case, of course. So This could be your short, something like this power of 3 you see here, 5 minutes after the open of this candle. So in this week this could be your short. Where are you exiting? When the new high time frame candle print a lower low, which is this one. You see in 4 hours, see here, lower low. You are exiting here. Exactly the same happened on you. Let's look for a high time frame right. So here I see that this is different. So this is another SMT here. GU print a higher high while EU was printing lower lows. So that could be our trigger to go short here. As you can see, I was in front of the charts this day, but the model still happening every single time, every single session, every single day, every single pair, every single market, and it won't stop. Okay, so do we have a high time frame purge here? Yes. Do we have the previous candle purge, which is this one? By the way, I didn't talk about this entry, but it's exactly the same that happens on GU. The difference is that GU created this lower low while EU failed. So that's your trigger to go long here. That to me, this looks like this. To me, EU complete this run liquidity. The 7 AM lower low is this candle here. So you see this 8 AM candle completes the 7 AM lower low. It makes a low time frame right. Here is your long. Where are you exiting your position? When 9 AM candle, which is this one, is printing a higher highs. Okay, so finally we are ending the video. First 15 minutes after taking a high time frame right, we have created a previous hourly right here and a low time frame right, because this happened with the candle that's making the high time frame right. We don't need to wait for this candle to create another low time frame right. This already happened here. But in case that you are not going short here, you already know that we are waiting for next candle to print a power of 3, and we are going short here. The stop is protected with a high, but I don't like 3 pips stop loss, so at least 5 pips. And where is our exit? Here it's 9 AM, so at 1 PM, price will create, or price will print a lower low candle, and it's our exit. As I said on you, we don't have a high time frame bearish or bullish objective, so we can exit as soon as the new candle is printing lower lows. In this case, look at the risk reward. If it's good for you, I mean, you can place your stop loss here to break even. At 10 AM, when makes a lower low, is 2 hours good enough for you for Friday, New York. It is to me, so this could be a good exit point. If you are not exiting here, where is the next hourly printing lower lows? Here is a 11 lower low, 3 hours, it's good enough. And finally, here it will be the new high time frame lower low. That will be 4.5 hours. And this is your final exit. And finally, this is the end of the week. Okay, so I hope that the model is being clear with every single video, every single trade that I am sharing on Twitter with its explanation. Okay, This model is not my full strategy. I would say that it's 10% of my full strategy, but I'm trying to create a model that all of you can understand, and it's as much as mechanical as possible, not discretionary. Of course, you need to know the underlying equity, or you don't need to know, but you need to understand or try to understand where price is heading to. It's not necessary 100%, but it's important. But as I said, it's not the time yet. Well, yeah, I was saying that I'm trying to create a model that all of you can use, and a profitable model that you can make money with it. Okay, it's not done, the model. It still have some secrets that I will reveal on the next days. Some important aspects as the entries are important to know where are you pressing your the short or long button, okay? But you already know what to do if you want me to release this chapter. Okay guys, so this is gonna be it for this video. I hope you enjoy and learn. That's the purpose of the video. If you like and enjoy, just give your like. On the previous video, you didn't. I mean, you couldn't comment anything and share me your feedback. I think in this video you can share me your feedback in the comment section. So let's see. So next week ahead, it will be one of the most beautiful weeks on the market of the year, in my opinion. You will see the reason. So let's kill this week.